It's time to check in on Airbnb after the company reported their Q3 earnings. What is going on, investors? Hopefully you guys are doing well out there. Checking in on this company. It's one we occasionally do earnings videos on. I think this one's kind of interesting than the regular session. Stock was up about 2% in the after hours. I'm seeing this one down maybe roughly closer to 7%. We'll come over here and we'll look at it from a technical perspective. It's actually been performing relatively predictably. So it's something that you could trade. It's something that if you are trying to accumulate more shares of this company, something that I think you could pretty accurately predict from a technical perspective. We are going to get into these Q3 numbers, which came in after the bell. Revenue coming in at $2.88 billion. That was strong. 28% growth year over year. It beat expectations by about $30 million. They also beat expectations on that earnings side by over 33 cents per share. And when we come over here and look at these financials, these are fantastic. I tell you what, if they can put up 4 quarters of this in a row, this company's probably undervalued despite having a $74 billion market cap. But as we walk through these, you're going to see that $70+ billion market cap on this one is at the very best, probably fairly valuing these companies. Now, we also got a little bit of Q4 guidance as well. Revenue expected to between about 1.8 and maybe as high as about $1.9 billion. You'll notice sequentially quarter over quarter, you have a drop off, but that's pretty typical in this business. You have a lot of people taking vacations when their kids are off school during the summertime. And as the kids go back to school, there's obviously less time to travel, less time to go to Airbnbs and those types of things. So they see a drop off. They see kind of a peak in the third quarter, and then fourth quarter, first quarter, second quarter is kind of building up to that summertime when you have a lot more business at Airbnb and from the travel perspective as well. When we look at the analyst estimates on this one, you'll see evidence of that. The next subsequent 2 quarters, you're expected to actually go down in revenue to about $1.85 billion, down to 1.7, and then reaccelerate in Q2 to $2.4 billion. And then this time next year, which again, Q3 is basically like the holiday season for this company, we're expected to go to $3.2 billion. That would represent 14% growth over what the company just put up. And really, when you look at these earnings numbers, you're really looking at kind of a mid-teens grower out into really 2024 with this company. I think more importantly than that, the revenue's good. It's fine. We'll take a look at it here in a second. It's really these earnings. Okay, the Q3 earnings came in at $1.79 per diluted share. Wall Street was expecting $1.50. I tell you what, if they were able to put up $1.50 in earnings or $1.79 in earnings for subsequent quarters, this company would be one I might be buying as early tomorrow. But what you're seeing with Wall Street is the earnings really fall off the map when you just get a small drawdown in the revenue. So the upcoming quarter, just 21 cents in earnings. You're actually expected to go to a loss of 9 cents in Q1, and then it reaccelerates back into the Q3 next year, back to $1.74, which again is about the quarter that they just put up. The other interesting thing that we're seeing over at Airbnb is the good times behind us? Are the glory days of everybody going and taking a vacation, is that behind us? Because what I noticed in the most recent Q3 is the average night, basically the average kind of booking price was at $156. The previous quarters, they were actually higher, up closer to 160, even 168 in Q1. Maybe we have a little bit of an acceleration back to that high end, but I just think you're eventually going to hit your head on the amount you can charge people for a hotel room and certainly an Airbnb stay. Now, that's not unique to any business, certainly not Airbnb as well. But if you believe kind of the glory days of people going to vacation, which you see a little bit of evidence when you look at nights and experience books, we've actually had sequential declines all this year from Q1 down to Q2 and down to Q3. We're actually seeing less nights booked over at this company. And so with the combination of less nights books and the fact that pricing looks like it's maybe coming under pressure just a little bit, at least sequentially, well, that can be some problems for subsequent quarters with this company. But this Q2 in a vacuum is sensational. Take a look at the $2.9 billion worth of revenue. We talked about how that was 28% growth over the previous year, where you were closer to about $2.24 billion. You roll through all of your expenses, and the company is very well managed. You take a look at your total costs and expenses expenses over the last year. Went from about 1.4 billion up to just 1.7 billion dollars. That gave you income from operation in the most recent quarter at a very impressive 1.2 billion dollars. So off 2.9 billion dollars worth of revenue, you clear 1.2 billion dollars of income from operation. Last year it was impressive too at $851 million. You pay some interest and you get quite a bit back when it comes to interest income at this company. You have some other expenses and you flow all the way down to net income of over $1.2 billion in the most recent quarter, again, off of $2.9 billion of the revenue. Extraordinarily impressive. And if this company could just do this every quarter, well, again, this is probably a stock I would just run out and buy because this is a fantastic investment, even at an elevated or a somewhat fair, somewhat elevated valuation. But you'll notice, though, if we flow over to the 9-month ended chart here, you see their income from operations over the last 9 months is $1.6 billion. So almost all of their net income or their operating income came in the most recent quarter. Same thing holds true for the net income. They had about $1.6 billion worth of net income. Again, $1.2 billion of that coming in the most recent quarter. So that third quarter, just very key from a profit and a revenue perspective. We flow down to the balance sheet, and this really emphasizes how well this company is doing. You see the company has over $9.6 billion of just straight cash, and that's more than half of their total current assets at $16 billion. You look at total liabilities of just $10.5 billion, including about $2 billion worth of bank debt. So this company is extraordinarily well capitalized and has an extraordinary balance sheet, and considering their cash flows and their earnings, they don't have a lot of use for this cash. I'll show you that oddly, this company is actually doing a buyback, which you don't really typically see for a company that's really only been public for almost 2 years now. We flow down to the cash flow statement, and as you guess, this is going to be really impressive. Over the last 9 months, you had a net income of $1.5 billion. You get to add back in stock-based compensation of $676 million. You get other add backs and subtractions, and you get to net cash provided by just straight operating Airbnb coming in at nearly $3 billion over the last 9 months. Last year, you were at $1 billion lower. So they've added $1 billion worth of operating cash flow over at this company over the last year. That's like what things are, you're like dreams are made of when it comes to an investment. They have very few investing activities. It's an asset light business, as you'd imagine. So they don't have a lot going on here. Now, when you come down here to financing, I talked about how they actually are buying back the stock, repurchase of common stock here at $1 billion in the most recent quarter. That more than offset the $676 million worth of stock-based compensation. So from a shareholder perspective, they're actually retiring shares at Airbnb, but we still have to talk about the valuation with this one. $3 billion worth of positive cash flow over 9 months. Give them credit for maybe another $1 billion in the upcoming quarter. You've got $4 billion worth of just operating cash flow. Again, you still have a $73 billion market cap on this one, probably coming in a little bit over the next couple of days if the stock stays right around $100 per share. That is still incredibly rich, okay? And then obviously from an earnings perspective, while it says 48 here, it's probably closer to like the mid 30s in terms of forward earnings estimates. Still incredibly rich for this type of company, especially if you are of the belief that maybe those nights and experience, we're not going to reaccelerate like we did after the pandemic. And then also the pricing on that has to likely come down. I mean, it's just too expensive for a hotel room. I know people are paying it now, but are they going to be paying it a year from now, 2 years from now? Those are questions we definitely have to ask ourselves in relation to the valuation and the potential growth rate for Airbnb. Now, from a technical perspective, it has been in this downward channel and it's constantly hit its head on it over the last, really since November. Like a lot of stocks, they peaked out in November of 2021. And for a year, it's basically been going down. And I put a fake red candle in here earlier today. We were at 108, 109 on this stock, and now we're trading back down here at about $100 per share. Should actually be some psychological support for the stock at 100. The 52-week lows are down here, or really the all-time lows on this stock are down here about $89, $90 per share, really $86 to be specific about that. I think if you're going to buy this stock, you obviously have to be comfortable with the fact that you're paying a premium when it comes to forward cash flows, forward earnings, and you have to be of the belief that this company is going to be able to continue to accelerate the number of nights books. And on top of that, at the very least, offset the price declines I think we're going to see from kind of a per night basis when it comes to lodging and hotels. Obviously, if you're of the belief that this is just going to continue to accelerate over the next 2 or 3 years, then look, the stock is, I think, probably fairly valued for the growth rate that you are paying for. Fairly valued might be an exaggeration. It's probably slightly overvalued if you believe that these growth rates are just going to be able to either sustain themselves and particularly kind of maintain maybe kind of a mid-teens grower in the future. I am not convinced of that. I think a business like this has been positively impacted by the reopening, if you will. And I think a trend like that is at least going to hit the pause button, if not reverse into next year. And the companies that actually struggled in 2022, those are actually the ones that probably will see their business reaccelerate towards the back half of next year, as everybody will have taken a vacation. Everybody will have gone everywhere they wanted to go. And then maybe they go back to buying Nikes or a new computer or something like that. That's just my belief. We'll see what ends up happening. Certainly a very, very well-run company, but the valuation just quite not cheap enough to make it a screaming buy, but the fundamentals are as good as we'll see here on the channel. And the company has a balance sheet to really do whatever it pleases, whether it's buy back the stock or make some acquisitions or grow the business organically. Hopefully, guys enjoyed today's video. Obviously, I'll have more later in the week. Good luck with your investments.